So I was out this past weekend looking at homes, going to open houses, and talking to other real estate professionals. And it's the same conversations right now. It's interest rates are too high, housing prices are inflated, it's too expensive, buyers can't afford a home, the election, all this noise. I'll tell you what nobody's talking about is how much home can you afford? And that is what I am going to be discussing today. In 2007, I purchased my first home. It's a small condo in Avon, Colorado, which is about 7-8 miles west of Vail. And it was September of 2007 when my wife at the time and I purchased this home. And the discussion at that time from the real estate professionals and the mortgage brokers, which is why they call them brokers, because they will make you broke, by the way, and us real estate brokers too, will make you broke too if you're not educated about how much home you can afford. And at any rate, the talk of that during that time was you have to buy a home, because if you don't buy a home now, you're never going to be able to afford a home, and you have to buy a home. You're going to get priced out of the market because prices were doing this. And I fell for it, hook, line, and sinker. And I bought this home, this condominium that had mold damage. The foundation was leaking. It was below grade. It was 698 square feet. It was a 2-bedroom, 1-bath condominium. It didn't even have a washer and dryer in it. You had to put quarters. It was a coin-operated washer and dryers at the end of the hallway. And my wife, Nancy, and I at the time, I don't remember exactly what our annual income was, but it wasn't even combined. It wasn't even 6 figures. It might have been just shy of that. And this home was $245,000, and the homeowners association dues were $300 and a quarter maybe at the time. And of course we bought this, and we know what happened. We went into the greatest recession, the Great Recession of all time, the greatest financial conundrum that we have experienced in our lifetime. And the home, the value of the home, we lost 100% of our equity within a few years, and that wasn't even the biggest issue. Is that there was massive struggle in the free market, and my wife lost her job. I had lost a fitness business, had gotten demoted at another job. I was working at the Ritz-Carlton at the time, and times were hard. It was very, very difficult. And the point is this, is fast forwarding today, when they're talking about interest rates being so high and home prices being inflated, which might be the case, what we aren't talking about is how much home should you purchase if you are in the market to buy a home. And here is my rule of thumb for you, based on my experience from buying too much home in 2007, when we thought the market was going to continue to climb and that the job market was going to look good and our career prospects were looking up. And then we hit this massive recession and the wheels on the bus fell off and everything fell apart. And you should not purchase a home unless you are free of consumer debt. So no credit card payments, no school loan payments, no car payments. Number one, you should be debt free. And that might not be a popular opinion, but I'm telling you, you should be debt-free before you purchase a home. And you should also have 3 to 6 months of expenses saved for a rainy day. So that's the first thing the second thing you want. So debt-free, you want to have 3 to 6 months of savings, and your housing expenses when you purchase your home, regardless if you're a first-time home buyer, a second, or if you've bought a home before, your housing expenses, including your mortgage, insurance, taxes, and homeowners association dues, if applicable, should not exceed 30% of your take-home pay. So, if you make $10,000 a month, your housing expenses should not exceed $3,000 per month. Now, here's where it gets tricky. Mortgage lenders and banks traditionally will loan up to 50% of your income. So, if you make $10,000 a month, and let's assume you have no other debt payments, no school loans, credit cards, car notes, alimony, child support payments. Let's say you have no debt. You make $10,000 a month. They'll loan you up to $5,000 a month for your housing expenses. But should you do that? You shouldn't do that. And here's why. If you are spending more than 30% a month on your housing expenses, you will not have enough disposable income to eat, invest 15% of your income into retirement accounts. You will not have enough money for vacations, clothing, recreation, going out to dinner, or saving up money for a car that you will pay cash for, because taking out a loan on a car is absolutely the dumbest thing you can do. Do not borrow money except for purchasing a home or other assets that appreciate. You should not be borrowing money for anything except for appreciating assets such as homes or businesses, etc. So, if you are in the market to purchase a home, please understand that despite banks loaning up to 50% of your take-home pay to purchase a home doesn't mean that you should. I hope this information was helpful for you today. Thanks for watching.